We know that managers should make decisions that enhance long-term shareholder value, and they should be less concerned about short-term accounting measures such as earnings per share. With that important point in mind, you might reasonably wonder why it is important to talk about accounting and financial statements. The simple answer is that financial statements convey a lot of useful information that helps corporate managers assess the company's strength and weakness and gauge the expected impact of various proposals. Outsiders also rely heavily on financial statements when deciding whether they want to buy the company's stock, lend money to the company, or enter into a long-term business relationship with the company. At first glance, financial statements can be overwhelming, but if we know what we are looking for, we can quickly learn a great deal about a company after a quick review of its financial statements. A public limited company issues all these statements in an annual report. The annual report is the most important report that corporations issue to stockholders. It contains two types of information. There is a verbal section, often presented as a letter from the chairperson, which describes the firm's operating results during the past year and discusses new developments that will affect future operations. Second, the report provides 4 basic financial statements. I am going to explain what these statements are, and at the end I will show you the most authentic source where you can obtain the annual report of any public limited company from. Balance sheet shows what assets the company owns and who has claims on those assets as of a given date. A balance sheet shows the financial solvency of a company. The essential components of a balance sheet are the date on top and the accounting equation of assets equals liability plus equity. Income statement shows the firm's sales and costs during some past period or over a period of time. It may not be considered to be the financial strength of a company. Statement of cash flows shows how much cash the firm began the year with, how much cash it ended up with, and what it did to increase or decrease its cash. This statement signals firm's liquidity status, which is greatly needed by creditors. Statement of stockholders' equity shows the amount of equity the stockholders had at the start of the year, the items that increased or decreased equity, and the equity at the end of the year. Now, let's talk about where we can find these statements from. There are varieties of sources available. For example, Yahoo Finance, Wall Street Journal, Morningstar, and company website under Investor Relations. I will show you a government source called EDGAR, where every public limited company is required to submit their statements. Let's open a browser. Search for EDGAR. Click the link that says Company Search Page sec.gov. Type in MSFT, ticker symbol, in the search box to get Microsoft Corporation's financial statements. Under the selected filings, you can access 8K, 10K, proxy statements, and ownership disclosures. I am going to click 10K, that is the annual statements. Click the latest annual report. Now, click the sections on the menu and select financial statements. You can now see that you have all the financial statements that we discussed earlier. Let's click the stockholders' equity statements. You have the statement showing on your screen. Likewise, you can click on any statement you like. Please note that this is the most authentic source of any public company's financial statement information that you can access. Thus far, I showed you Microsoft Corporation as an example. You can try out any public company of your choice and review their financial statements. In the next video, I will discuss how you can analyze these financial statements to create a meaningful interpretation of the data. The link is in the description below. Thanks for watching this video.